Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Stephen Hochberg. He is the Chief Market Analyst at Elliott Wave International. Welcome to the channel, Steve.
Thanks, Ivan. Thanks for having me.
Yeah, thank you so much. This is your second time on Wall Street Bullion. I wanted to get you back on to talk about everything that's happening in the markets, silver, gold, the financial markets. But let's dive right into it. What's happening today as the 27th of May in the stock market? Is it a green day? Is it a red day? What are you seeing?
It was a green day across the board. As we're speaking, everything was up. Stocks were up. Interest rates came down. Commodities were flat. Gold was flat a little bit. Silver was flat to up. But if you look at the stock indexes, everything was up across the board. So it was a good day in the markets today. The real question is not when you get today or days like today where basically everything is up, is what is tomorrow like? What's the follow through like? Um,
What's your, I guess not so much predictions, but what is your feeling like in the next week or two? Are we seeing it go higher, but is it just unpredictable? Like, how can you even predict the stock market?
well, we use patterns to predict it, and the patterns right now are kind of in between. I think there's some indexes like the Russell 2000, the mid cap S&P mid cap 400, the Value Line Composite, which have these bearish patterns. I think the Dow fits into that category, and then there's some stock indexes like the S&P 500 and the Nasdaq 100, which just don't have the type of bearish signature that some of these smaller cap or mid cap indexes have. So there's a lot of cross currents in terms of the stock indexes. But I think that's going to work itself out over the next couple of weeks. There's a lot of optimism in the market. And to us, paradoxically, when it gets to this degree, it tends to signal a turn to the downside, not a turn to the upside. And like I'm specifically thinking things like the CBOE put call ratio. We look at it on various levels, and on a 21-day basis, it got down to 0.54%, meaning that there's almost two calls being bought for every put that's being bought. And usually when you get to that extreme, you're usually near a market top or a market high. It's the same value that we hit in February of this year when the S&P and the Nasdaq 100 top. So it's going to be interesting to see if that put call ratio rolls over, which is in terms of this indicator a sell signal, but there's a lot of stuff going on, a lot of cross currents, and that's what we're monitoring every day.
What are your thoughts, Steve, on, I guess, price manipulation in the stock market, price slams? Is it due to people selling in large to get to trigger algorithms? How do you predict those, or what's your take on those? Do you believe it does happen?
Yeah, I think the market's a little bit bigger than people that try to manipulate prices, at least on an intermediate to long-term basis. On an hour-to-hour basis, maybe even a daily basis, sure, you could see some sort of emotion come into the market. But I think the long-term trends, the intermediate-term trends, really aren't affected by people trying to manipulate the market short-term.
Right.
We don't put too much emphasis on that.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
What about what's your massive or just main concern, or not even just a concern, but what do you have your eye on right now that I guess keeps you a little bit of keeps you worried, whether it's geopolitical or in the markets or debt levels or something in the financial markets? What keeps you concerned right now, Steve?
Yeah, everything. It's like I'm paid to worry, and so I worry about everything.
Right.
Right now, I think if you look at interest rates, you had the 30-year Treasury bond above 5%. It's now come back a little bit. You had Japanese interest rates, long-term interest rates at multi-year highs. You have some problems with the amount of debt on, say, Japanese insurance companies that own a lot of this debt. That's stuff we're looking at. We're looking at credit spreads, which tend to kind of lead the market and give you a kind of an idea of what's going on around the corner. They were about 250 basis points earlier or later last year. They shot up. They credit spreads widened to about 450 basis points. They've now come back to about 320 basis points, but they've come back to a trend line that they've broken out of over a multi-month period. So that's something we're kind of looking at and keeping our eye on. I'm not in the huge bullish camp here. I mean, if the market, even if the S&P or NASDAQ is able to make a new high, I don't think things like the Russell 2000 or the mid caps or the small caps are going to confirm. And when you have that divergence in the market, it's not a healthy sign usually.
Yeah, absolutely. Now, what about the precious metals market? A lot of people are saying, it's in a consolidation period. We're going sideways. What are the trends saying, or what are the charts saying for silver and gold?
Yeah, silver is interesting. I mean, it had a really nice run up from April 7th. It's moved sideways for a period of time. Usually, sideways marks a consolidation phase or a pause phase in the trend that led up to it. So you had a rally trend from April 7th, a sideways pause. It usually means you're going when that pause ends, you're gonna continue the trend that you led into that with, which would mean a rally. In terms of gold, very interesting. We're at an important short-term period here, just above 3,300. We're consolidating right now. I think if we can get above 3,375, to me, that's an important level in terms of the Elliott wave pattern. If we can close above that, that would suggest a bullish resolution to what we're seeing here. But as long as we remain below that, I think silver is going to outperform gold. So I think the gold-silver ratio is going to start declining here as silver holds up a little bit better than gold does. But they both are really at interesting junctures here. And again, it's something we're following on a very short-term basis and what I do on my updates and on an intermediate to long-term basis in our newsletter.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Now, there's a lot of new people on this channel, investors, gold bugs, silver bugs as well. A lot of people who are starting to get in the investing world. A lot of them are younger crowds. What would your guidance be for them, or what would be the advice that you wish someone gave you 20, 30 years ago in the
Yeah.
markets?
There's times to take risk and be very risk oriented and times to be safe. And if I had known that when I first started out, that really would have helped me a lot. For example, here we are in the end of May, and the Dow is actually down for the year in 2025, as is the NASDAQ composite. The
Right.
S&P is up a very small percentage. So if you were in a short-term cash environment, like a short-term treasury bill, for example, you're actually outperforming the market in 2025. So there's times that you really want to press, and those are the times when the market's down and psychology is really negative and the headlines are negative. You got to push against your better judgment and say, yeah, this is the time I really want to be investing in. And on the contrary, on the opposite standpoint, is when things are really optimistic and people are like jumping in and they're buying the Mag 7 and so forth. Those are the times you want to step back and maybe look to be a little bit more conservative and in cash. And so I think we're in one of those times right now. It's very counterintuitive, but I think over the long term, it's really going to help you out a lot.
Absolutely. Now, Steve, before you go, I really want people to connect with Elliott Wave International. I want them to follow your work. I am going to put a link in the description below, but where can people find you? I guess what's the benefits of following Elliott Wave and yourself?
Yeah, you can find us at www.elliottwave.com. There's two L's and two T's in Elliott Wave. It's one word. And the benefits are that we come at the market a little bit different than a lot of people do. Our models are based on psychology, on how it goes from pessimism to optimism and back in a very patterned way. And I think that's really interesting for people to read about because you're not reading the headlines for what they say, you're reading the headlines for what they mean. And a lot of times what they mean is exactly the opposite of what they say. People are super bullish. That's the time to be cautious. And when people are super pessimistic, it's time to be bullish.
Yeah, absolutely. Well said. Everyone watching this, highly recommend. Please go check out Elliott Wave International. I'll put the links in the description below. And you know, Steve, it's only your second time on the channel, but I'd really love to have you back on more as the market develops. Thank you so much for coming to speak to the whole community.
Well, thanks for having me. Appreciate it.
Talk to you soon.